Hi guys, happy weekend. I hope you had a productive and a profitable trading week. It's been quite a while. I made a video. The past 1 year had been extremely busy and very exhausting for me because I'm currently enrolled in a software engineering program that is taking all my time, and my company is currently going through some transitions that requires a lot more of my involvement. Okay, so I've had very little time to make videos or even manage my Telegram group chat. Okay, but things are getting a little bit lighter for me now, and I'm very close to rounding off my program. In the next couple of months, I'm going to be rounding off, and I just can't wait to get back to active trading again. Okay, so I'm making this video as a kind of answer to a very common question that I get about daily bias. Okay, if you ask most ICT traders, the biggest challenge that majority of them will tell you they have is that they often don't know when to go long or when to go short. They have a problem with framing a bias or framing a narrative, because one thing you have to understand is that most of the time price would always present you with an opportunity to go long or to go short, even on the same day. So if you don't have a clear bias, if you don't know what price is going to do, or have an idea of what price is going to do, um, you will have a hard time trading profitably. Okay, so this video is like a kind of comprehensive tutorial or a comprehensive explanation of how I personally determine bias, and I also want to provide a kind of update on the EA that I'm building, as well as the indicator equivalent of the EA for TradingView. Okay, so let me first give you a kind of background on the EA that I'm talking about, in case this is your first time of coming across this channel. Okay, so sometimes last year I started a kind of journey to automate my trading strategy, right? Because of the time constraints that I'm having, and then I was trying to see how an EA would perform. When you get rid of emotions, that's like the biggest drawback of most traders. That's the biggest challenge of most traders: the ability to control their fear of losing money, patience issues, the fear of leaving money on the table. Those emotional roller coaster of being a trader. So I thought, if I am able to get rid of those emotions, and if I'm able to convert my trading strategy into a robot, train a robot on how exactly I trade. I was just curious to see how well it is going to perform. Another thing that sort of motivated me to start the development of the EA is I wanted to be able to backtest any trading strategy, right? I wanted to be able to backtest any concept. Okay, I don't just want to hold on to a strategy or a concept just because somebody said so. Okay, I don't just want to believe a phenomenon in the market is correct, or that it repeats, or that without an accurate back test of that concept. Okay, not just, if, for example, if ICT says 70% of the time Tuesday is going to be the high or low of the week. No, I don't just want to just believe it because ICT said so. Okay, I wanted to be able to backtest and verify every single concept or every single building blocks of my trading strategy. So that was really what pushed me to learn algorithmic trading. Okay, and over the last 1 year, I have backtested a lot of strategies, not just ICT strategies alone, even other strategies that uses indicators and the likes. And one thing that has remained constant is that without daily bias, or without a bias, or without a clear narrative of what price is going to do, no trading strategy is consistently profitable. Now, it may be profitable for a few weeks or even a few months, but over an extended period of time, say a year, 2 years, 3 years, or more, it's going to turn out negative, right? Without daily bias, or without a clear narrative of what you think price is going to do. Okay, and this was the first challenge that I faced when I started building my EA. Okay, it's a very basic, simple concept. The EA basically waits for liquidity sweep on the 1 hour, waits for market structure shift on the 5 minutes, and then it goes long immediately there is a it goes long or short immediately there is a market structure shift. So very basic, very simple strategy, right? But the problem I had was it was profitable on some months, very negative on some years, profitable on some years, and then I realized that if I can build a kind of bias into that EA, I realized that the results would be much more better. Of course, I didn't know, but I could tell when I went through the series of trade that this trade should not have been taken because price was aiming for this area, or this trade should not have been taken because price is going down to this area. So I knew that from checking the series of trades it took, that if I can build a kind of bias into the EA such that it doesn't take every long trade, it doesn't take every short trade, it is able to selectively pick when it should go long or when it should go short, when it should ignore some long setups, when it should ignore some short setups. I knew that if I'm able to build it into the EA, it is going to do perform a lot better. Okay, and when I started out building the bias into the EA, or a bias algorithm into the EA, I backtested every single ICT PD array that I'm familiar with, from other blocks to breakers to fair value gaps to new week opening gaps and so on and so forth. And I wanted to see which of the higher time frame PD arrays I can use to frame a bias. And for my backtest, I realized that the new week opening gap has the most accuracy. Okay, and that is why um, the bias is framed on the new week opening. Now it uses a combination of different things. Okay, the new week opening gap is just one of it. Okay, it uses the weekly time frame and the daily time frame to frame bias. Okay, right? I'm going to go over the step-by-step approach to how the EA determines bias. So the exact same algorithm I built into the EA is what I want to teach in this video. Now I will explain to you why I am teaching this. Okay, beyond the fact that it's a common question that I used to get, I'm also making this video as a kind of solution to the indicator equivalent of the EA that I built for TradingView. Okay, it hasn't been released yet, but in the coming weeks or months, it's going to become available as a private script on TradingView. Okay, I might drop the link in the comment section if it is ready by then. If not, I'm going to provide an update on the Telegram channel. Of course, it's a completely free script, but it's not public. Okay, it's a private script, so you can only access it directly from the link. Okay, but it's free. You can use it for free, but it's a private script. I can't publish it because of a limitation on TradingView. All right, I don't want to make the source code public. and TradingView has a kind of limitation on that. So that's why I'm publishing it as a private script. Okay, the indicator is what you can see on my screen. It's basically an indicator that tells you to buy, to sell, or that shows sell or buy setups based on how the EA trades. Okay, the only problem right now is that I'm having a hard time building the logic or the algorithm or the daily bias or weekly bias algorithm into the EA because of the limitation on the free version of TradingView. Okay, there is a limit to the amount of data that TradingView makes available on low time frame. Okay, so I think low time frame data on the free plan is only as far back as like the 1 month, and it's framed by us even as far back as 5 years back, 10 years back. It still refers to old PD arrays. PD arrays are formed like 5 years ago, 10 years ago, and even 15 years ago, right? So there is no limit. It can go as far back as whenever. It just depends on where price is currently trading relative to old um, data or old candle series, right? So I'm creating this video so that by the time I release the indicator, you will be able to know when to take the long. When you say long setup, this is the buy, for example. You'll be able to know, okay, should we take this buy, and then we have a sell. You'll be able to know, should I take this sell based on the bias. So since you know the bias, you can just use indicator just as a kind of guide, when to go long, when to go short. Okay, so without wasting further time, I think the first thing I'm going to do is I'm gonna run a quick back test, okay, just so you can see what the EA looks like, and I can show you a fair example of setups it took, and then I will go over how it's determined weekly and daily bias. Okay, so um, I'm going to switch over to MT5 so that I can use the strategy tester to run a quick back test. Okay, so this is the MT5 strategy tester, right? So I'm going to run a quick test now. I think I'm going to start from, okay, let's run recent price action. I'm going to start with 1st of April to, should I make it, okay, it's like current price action, like the current price action. So from 1st of April to current price action, right? And let me just check the input parameters to be sure everything is fine. So you can see this is the daily bias algorithm. I can enable and disable the algorithm from here. So if I set it to true, it means it is going to use the bias algorithm to frame its setup. If I set it to false, it means it is not going to use the bias algorithm. It's just going to take every long and short setups, okay, without any filter, right? So I'm going to enable the daily bias algorithm, set that to true, kill zone true. Okay, I'm just going to leave the default on order. As you can see, the primary liquidity time frame, so it takes liquidity on the 1 hour time frame and market structure shift on the 5 minutes, right? So that is basically what the setup is based on. And also the market structure shift is based on intermediate term highs and lows. Okay, the risk management, the risk per trade is 1%, 1%, 1% risk per trade. Yeah, 1% risk per trade, and break even is also enabled on the trade. From here So I'm going to run that. Should I enable? Okay, so visual mode is enabled. So I'm going to quickly run that. Um, Let me reduce the speed, then just quickly run over it. Let me increase the speed. So basically, what is happening is this is MT5 strategy tester, right? Um, what it is going to do, it is going to run through all the historical price action based on the dates that I have set into the strategy tester. It's going to print each bars, bar by bar, and then when there is a setup, it's going to take the setup based on how the EA is programmed. Okay, so let me click on the play. I think I should make it faster. Okay, so you can see that this is the first. Now notice here that we had a cell setup here. If you can look, I don't know if you'll be able to see it, but it is faded. Okay, so that is the daily bias algorithm at work. There was a short setup, but it didn't take the short setup because the bias is long. Okay, so when there is a short setup and the bias is long, it is not going to take the short setup, it is going to gray it out. So telling you that the bias is currently long. So that is why, so that means you shouldn't take the short setup. So that is why the EA did not take the short setup. Okay, and then the next day, price took liquidity below the previous day's high. You can see the line draws out the liquidity that was taken. This is also a 1 hour liquidity, so it draws it out. This is market structure shift. This is an intermediate time high because it has two lower highs to the left and right of it. So that is what an intermediate time high is. If you don't know what I mean by intermediate time highs, I made a video on this institutional market structure sometimes last year. You can check my YouTube channel and look for that video. Okay, so this is the first setup that the EA took. So it went long here. The bias is bullish. I'm still going to explain exactly how it determines bias using the weekly and the daily time frame, right? After I've gone through this backtest. So it is long from here. So let me, and then closes the trade right there. So that's pretty much, I think, about maybe 2 or 3 hours. So it only closes a trade if there is an opposing setup. Okay, that is if there is liquidity sweep above a 1 hour high. This is a 1 hour high, this is a 1 hour high. So it has taken liquidity above here, and then market structure shift below this intermediate term low. So it is going to close the trade and then take the opposite trade if the rules permit. Okay, on this day, for example, it is going to take, that means it would have been stopped out somewhere around here, should have gone short here and then stopped out and then went long again. Okay. Okay, now another thing is the break-even algorithm. Okay, here you can see from here it is already break-even. So there's also an algorithm I built into the EA where it breaks even. Okay, if it hits the like from here, for example, once it hits the ADR, this green line is average daily range. Okay, so once it hits the average daily range, it's going to move the stop loss to break even. So the same thing happening here. It hits the average daily range, move stop loss to break even. Okay, so it's still long. Now look closely again. We had a sell setup here, all right, but because at this point in time the bias is still bullish, okay, that is why it did not close the long. Okay, it only closes the long when the bias switch bearish, right? There's a lot of improvements I can make to the EA. For example, personally, at this point in time I will be looking to go short. Okay, but you know, because there is a daily fair value gap. Is it daily or weekly around this area? Okay, I know this because I traded this sometimes in April, so I know that there is a weekly fair value gap. It doesn't use weekly fair value gap at the moment. Okay, so weekly fair value gap, daily fair value gap doesn't use fair value gaps at all at the moment. So that is why at this point in time it did not go short and it did not close the trade. Okay, so it only closes the trade if there is an opposing setup. Okay, and the bias is in alignment with that setup. Okay, so the bias is still bullish, and then here this is when the bias switched bearish. Okay, and that is when it closed the setup for like I think 1 hour, gave back a lot of profit to the market. That happens. Now you can see there is also a buy setup here, but it did not take this buy setup because it was already in a long. Okay, so it only takes one trade. I haven't yet built pyramiding into it, so it only takes one setup. Okay, it doesn't pyramid. It only closes the trade when there is an opposing setup. Okay, I hope that is clear. So I'm going to increase the speed to just to make it faster. Then maybe we'll go over a few trades. Okay, so let me see if I can go over some of the most recent trade. Okay, so we see from here it took a trade here. So the bias was bullish here. It took a long. It was up like 2 hours, and then it got stopped out here. And then we had a short setup here. This is like maybe 1 hour or 1.5 hours, and then it went long here. Bias is now bullish. At this point in time, bias is now bullish. You can see it took liquidity below this low. That's a 1 hour swing low, and market structure shifts above this intermediate time high, and then it's long, rallied up, retracements, still bullish. This is another buy setup on this day, but it doesn't pyramid. This is another buy setup. You can see the short setup on this day. Okay, because price took liquidity above this swing high and above this high, and then we had a market structure shift below this low. This is an intermediate time low because we have this swing low and we have this little swing low, this swing low to the left and right of it. Okay, so market structure shifts, but it didn't close the long because bias is still bullish. Okay, the bias is still bullish based on the algorithm I'm building, so which I'm going to teach you in this video. Okay, don't worry, just be patient. I'm going to go over it in great detail. Okay, so and then we have the buy setup here, buy setup here. Now let me also state that it doesn't take any setup that is outside the Q zone. So if a setup forms outside the typical ICT Q zone, it is not going to take the setup. Okay, so it is still long. Okay, bias is still bullish. You can see that all the short setup are grayed out because the bias is still bullish and the bias is not yet bearish. Okay, so this is another short setup here, but it still did not close it because the bias is still bullish. So it's still holding on to that. But this is another buy setup here. This is another buy setup here, and so it's still holding on to this trade it took here. This is as far back as 1st of May. This is 9th of May already, so it's still holding on to that one single trade. Okay, so let's look at the results of the last 1 month. So what we just did is we ran the back test from 1st of April till current price action. This is Wednesday. I'm not sure why it didn't run through Thursday's price action. Oh, Thursday has not ended. Okay, so it has to wait till like midnight New York time before it will include Thursday's data into the backtest. So let's look at the results on MT5. So this is the backtest result. This is total profit of 15% from 1st of April to current price action. And you can see the balance drawdown is about zero. The absolute balance drawdown is zero. Okay, there was no drawdown at all, and the maximal drawdown is 2.65%. The maximal drawdown is basically the difference between the trough and the peak. Okay, so if the balance was at say 12% and then it has a losing streak, let's say two or three losing streak, and then it drops to like 9 or 10%. So the difference between the two, that is the maximal drawdown. Okay, and equity drawdown is of course based on equity. So based on running trades, you say the absolute equity drawdown is 83 points. Sorry, this is 0.84%, right? Because this is 9%, right? So this is 0.84%, and the maximal drawdown is about 5.12%. If you ask me, I think this is really, really good. You can see the Sharp ratio is about 3.34, right? This is Sharp ratio ideally should be above 1. Okay, so this is really good. And the percentage of trades is about 59%. Okay, so anything above 35%, once you have, as long as the RR or the profit factor is greater than 1, once the percentage of profitable trade is greater than 35%, that strategy can be profitable. Okay, so this is normally typically is around 50%, but over the last 1 month it is at 59% win rate. Okay, and total number of trades is 22, which is not too much. Okay, so this is not a large sample size to determine whether a strategy is going to be profitable long term. So what I'm going to do is let's run another back test. Let's run it for an entire year out. That will not take too long. I think it shouldn't. So let's run it for an entire year. So I'm going to run it through the whole of 2023 from January to, okay, let's just run it for a full 1 year. So I'm going to run it, make this 2024 0101. So from 1st of January 2023 to 1st of January 2024. So let's run it for a full 1 year and see what the result is going to look like. Okay, so I'm going to click on the start button, and then it is going to run over the last 1 year from this date to this date. Okay, so it is currently running. So that would take a while. This is June. Okay, so we can see some of the trades that were taken over the last. This is December last year. This is December last year. So you can see from there it took a long. Now notice that there were short setup. You can see that almost every single day you get both long and short setup. You can see here this is a short setup. So if you don't know what the bias is, you will be looking to go short, maybe inside of this fair value gap, okay, without a bias, and you would have been stopped out. Okay, but because there is a bias, here liquidity was taken here, market structure shift above an intermediate term high, and then it goes long immediately, right? It doesn't wait for a pullback. And the reason it doesn't wait for a pullback is because based on back test, I realized that it misses a lot of explosive price action, explosive move, while trying to wait for pullback. Because many times when price is going to make an explosive move, you will not get any pullback. Immediately after there is the market structure shift, it is just going to be running up and it won't pull back. Okay, so maybe I might build it build I might change the way it takes trades in the future to include a pullback. I haven't really compared the data to see which one is better, but let's see. So basically, it doesn't wait for pullback. It goes long immediately. There is a market structure shift. So you can see it went long right there. And on this day, you can see we had a short setup here, but you can see it is grayed out. Why? Because the bias is still bullish. So this is another long setup. This would have been a nice opportunity to pyramid, but right now, the EA does not take pyramid positions, right? And then on this day, the bias has now switched bearish. You can see price took liquidity above the previous day's high, price took liquidity above this 1 hour high, market structure shifts. You can see the liquidity that was taken. You can see that on this same day, there were bullish setups. Here now, at this point in time, the bias was bullish. So it's possible for the bias is dynamic, so it's possible that on the same day the bias might be initially bullish, but based on new details, it can then switch the bias to bearish. So like on this day, at the start of this day, you can see that the bearish bias, this bearish setups, this is a bearish setup, price to liquidity above this high, and the market structure shift here. You can see it's grayed out because the bias initially was bullish, and then you can see we now have a bullish bias here. Why did he not take this? Because it was already long. Okay, so that is why no long was taken here, no long was taken here, no long was taken here, because it is already long from the previous day. That's Tuesday, and then we had a sell here, right? Remember, it breaks even when price hits ADR. So this red line is the ADR, okay, and the green line is the ADR when it is going long. Okay, so bias is bearish now, so you can see that this buy setup that formed here, price to liquidity below relative equal lows, and we had a market structure shift above this high, but because the bias is now bearish, it did not take the long. Okay, but it closed the short because price has hit ADR. So one of the rule I built into the EA is that if price should hit ADR and we get a long setup, even if the bias is bearish, close the initial long setup. So that is why it closed the setup here. Even though it should have been a profitable trade if it did not close the setup, and at the same time it would also have broken even. So I guess this was a stop out at break even. This was a stop out at break even, right? So and then this is another setup here. So let me see if I can just go over a few more trades so that you have an idea of how it takes a setup. So you can see on this day as well. You can see this setup is grayed out. Right, initially at the start of the day, the bias was bullish, so that is why this short setup was grayed out. Okay, this is a down arrow. That's a short setup was grayed out. So it took liquidity above this high, market structure should below this low. So, and then at this point in time, bias is now bearish. But notice that I did not take a short here because price is outside the Q zone. Okay, this is 15 minus 12 minus 7. So this is 5. This is 15 a.m. New York time. So it doesn't take any setup that is outside the typical ICT Q zone. So that is why this setup was not taken. And then we had a buy setup here, right? Liquidity should below this low. market structure shift above this high. You can see that on this day there was both buy and long setups. Okay, you can see here now we had a short setup here, but it did not go short, neither did it close the long, because the bias is now what? The bias is now bullish. Okay, and then we had a short setup here. It closed the long and then went short, and then it got stopped out at break even and then went long and then rallied. This is almost 4R, but unfortunately it gave back everything to the market. Why? Because the bias is still bullish, and you had a really strong retracement that stopped it out at break even. Okay, so that's a stop out at break even, which happens, right? So those are just a few of the trades. You can see all the history of the trades that we're taking here. So I can just go over I can go over the trades and just see. Let me check this. You can see it took a shot here, right? Liquidity sweep above this high, market structure shift below this low. So it went short, it closed the short because at this point in time now, bias is now bullish. You can see that there was also a short setup on this day. This is a short. This is a short. This is outside the Q zone. This is a short, but it didn't take the short. It didn't close the long. Why? Because bias is now bullish. Okay, so this is why I cannot overemphasize the importance of having a clear bias, having a narrative, having an idea of what price is heading for, where price is heading for, what price is going to do. This is extremely important as far as ICT strategy is concerned. Okay, don't worry, I'm still going to go over it, but I just want to show you this back test so that you see for yourself that this it works. Okay, the strategy, the step by step I'm going to teach you on how to frame a bias. It works. It is the exact algorithm I built into this EA, and you can see the results of the. I'm going to go over 25 now to show you the results of the EA over the last over 1 year, between over the whole of 2023. Okay, and then took a long year, simple stuff. Liquidity sweep below a 1 hour swing low, market structure shift above an intermediate term high. So pretty straightforward. And then this is another buy here. Okay, but it doesn't clear me, so it didn't take this. And then we had a short here. It closed the short here because bias is now bullish, right? However, it didn't go long here because price is outside the Q zone. This is the start of the day. This line then marks the start of the day. So this should be around. This should be Asia. This should be Asia Q zone. It doesn't trade during Asia Q zone. Okay, it only trades during London and New York Q zones. Okay, so those are just a few trades that we're taking. So you can see no trade was taken here because the bias is bullish. So you can see that it also can have losing streak. You can see it took a short here, got stopped out, took another short, got stopped out again. So it is not 100%. I can see on this day the bias was initially bearish. It took a short, but at this point in time the bias switched bullish, and then it took a long and closed the short, and then it closed the short here. Bias was initially bullish here. Okay, you can see this short was grayed out because at the start of the day the bias was initially bullish. Okay, but it switched bearish here. It didn't say this long because price is probably outside the Q zone. What time is this? Yeah, price is outside the Q zone here, and then it took a short here and then close it here because on this day the bias is now bullish. Okay, so I can go over as many trades. It just repeats the same thing over and over and over again. You can see it does have losing trades. You can see it went short here, and then the bias switched bullish, and then it went long, and then closed the short here. Another short here. Liquidity super, both these are market structure shifts below this low. Closed it here. Okay, so those are just some of the trades that it took. So I'm going to go over to MT5 to show you the result of the back test. So you can see the result of the back test. This is 117% return. The balance drawdown, the absolute balance drawdown here is also basically zero. Okay, maximum drawdown is about 8.28%. And what's the sharp ratio? Sharp ratio is also 3, which is very good. The average of profitable trade is about 50%. So you can see that even with a 50% win rate, once your win rate is above 35% and your profit factor is greater than 1, you can be sure that over a large sample size you will be profitable. Okay, so this is the equity curve. Yeah, they are losing streaks, but over a large sample size, the equity curve, you can see, is pointing upward. Now, let me run the same back test, but this time around without the daily bias algorithm. Okay, without the daily bias algorithm. So let me turn off the daily bias algorithm. I'm going to turn that to false, and still the same data set, but this time around no daily bias algorithm. So I'm going to click on start, and let's see what the result is going to look like. So it is running through it. Probably going to take like 2 minutes. It's almost there. Okay, so you can see on this day, remember from the last back test we did, because there was daily bias algorithm was enabled, all this short setup was not taken. All the setups, they were not taken. So only took this short and this short. But on this day, it took this short, took this long, and took this short. Because now the daily bias algorithm is not enabled. Right? So every setup that it sees it is going to take, it same thing applies there. Took the long, took the short, took another long here, because the bias, there is no bias. So once there is a setup, it just takes it. Okay, so let's look at what the result is going to look like now. So you can see the profits is still profitable, right? It's still profitable even with the daily bias disabled. But look at the profits now as reduced by almost 60% or more. And look at the drawdown. The drawdown initially with the daily bias algorithm enabled was 0. Now the drawdown is 9%. Look at the percentage of profitable trade. Here is now 39.48%. And you can see that it took a lot more trade compared to the previous. I didn't show you the but you can go back and check. You can go back, rewind the video to check the total number of trades. You see that with the daily bias algorithm disabled, it's taking a lot more trade. Okay, so you can see that more trades doesn't necessarily means more profit. Okay, so let me show you the equity curve. The equity curve is still not that bad, but compared to the previous equity curve, this is not as good as the previous equity curve, even though it is still profitable. What's the Sharp ratio? You can see the Sharp ratio now has reduced from 3 to 1.58. Okay. Okay. Now let me disable the break-even algorithm. So let's assume it doesn't break even, and it trades all the setup. Okay, so let me disable the Q zone. Filter set up by Q zone. I'm going to set that to false. So I've disabled the Q zone, I've disabled breaking even algorithm. So you would see what it looks like now. So it's running again, this time around with no Q zone filter and with no break even algorithm enabled. Now I'm just running this just to show you the importance of the Q zone, and also why it's also a good idea to always break even. So I have a kind of rule or a system in place. You can see that it took this long here now. Initially, it didn't take this long, okay? The last one we did, it didn't take this long. But it took this long now because we have disabled the Q zone filter. So let's see what the result looks like. It's still profitable. It's still profitable. This is 25% return. It's still profitable, but you can see the drawdown now has now increased significantly to 18%, 18 or roughly 19% drawdown. That's huge. Okay, you can see the Sharp ratio now is now below 1, which is bad. Okay, and the percentage of profitable trade has also reduced to 32%. You can see that even with a win rate of 32%, it is still profitable. Okay, for 2023, anyways. And this is the equity curve. You can see how ugly the equity curve is. Now you can see it has a lot of deep drawdowns, deep drawdowns, deep drawdowns, deep drawdowns. Okay, so I showed you that just to give you an idea, to let you know that the Q zone, taking setups that form only during the Q zone is very important, and breaking even, when you are in profit is also important. Okay, so when you combine that with the buyers, okay, over a large sample size, you will be profitable. Okay, so I've showed you now that the approach I'm about to teach you works. Okay, so you can see for yourself that it works. I've run it over the last 1 month. I've run the back test also over one complete year from 2023 for the whole of 2023. Okay, so without wasting further time, I think I should just go straight to TradingView and show you how the EA determines bias and how you can also apply it to your own trading strategy. Okay, so this is the indicator version of the EA for TradingView. This is the current price action. This is Thursday, 9th of May. Okay, we had a sell here, then we had a buy signal here. I think I will come back to the indicator. I think I should first go over how the EA determines bias, how to determine bias. If we go back to the strategy tester, you would see that it is using the daily, the weekly, and the 1 hour time frame, right? It is using the daily and the weekly to frame bias. Okay, that is why it opened that time frame while running through the strategy tester. Okay, so it starts from the weekly. So I'm going to start by first explaining what it looks at on the weekly time frame and how it determines bias, when to go long and when to go short. So let me head back to trading view and let's go to the weekly time frame. Okay, so this is the weekly time frame. Let me just disable this. Okay, now before I go over the bias, I think I should go over a few concepts in case you are probably new to ICT strategy or just as a kind of refresher, perhaps you might have forgotten because those concepts are going to be very important to what I'm about to teach. Okay, please pay attention. If you have not been paying attention, this is the time to leave everything else you are doing, grab your pen and a paper or a notebook and start to note down what I'm about to explain to you, because I promise you, if you understand this concept, you will never have issues with bias. Okay, I'm not going to say you will never have a losing trade. Okay, that is important. Every trader will have a losing trade. Okay, but if you apply this to either your existing strategy that has an edge, I promise you, you will see a big improvement in your win rate and your profitability if you apply this. Okay, so let me go over a few concepts that you need to understand what I'm about to explain. Okay, the first thing is the concept of open, high, low and close. Okay, so every Japanese candlestick, right, carries four important data points. Okay, the open of the candle, the high of the candle, the low of the candle, and the close of the candle. Okay, the algorithm that controls price are constantly referring to these four data points. Okay, these are the data points it uses. All the ICTP DRAs are derived from these data points, from fair value gaps to other blocks to breakers to mitigation block. All of them are based on these four data points. Okay, so if you have a bearish bar like this, you know that the open is going to be where this is the open, right? You can see the values here. This is the open, rallies up, forms a high and then expand to the downside and then retraced towards the close of that bar. Okay, so we have open, high, low and close. Now if you have a bullish candlestick or bar, what you have here is the open. So when you have the close, when the close is above the open, that is a bullish bar, right? That is a bullish candlestick. All right, and if the close is below the open, that is what a bearish candlestick. So that's very simple. That is very basic. Right. Now, having understood that, I'm going to explain the concept of manipulation, expansion, and retracement. Okay, so basically, when a new candlestick is forming, if that bar is going to be a bearish bar, the first thing you will see is when the bar opens, you will see a kind of manipulation to the upside and then expansion to the downside, and then towards the close of that bar, you see a retracement back into the range between the high and the low of that bar. In the same way for bullish candlesticks, what you would find out is that it is going to open, we're going to see a manipulation to the downside and the expansion opposite to the manipulation, and then it is going to form a high, and towards the close of that bar, it is going to retrace back into the range. Okay, so Within the context of this video, you should know that I'm referring to, you should know that when you hear me say manipulation, I'm talking about that opposite move in price, that sort of tries to run stop loss, okay, before you get an expansion, that is also opposite to that manipulation. So when I say manipulation, I'm referring to stop on, or like a kind of, um, in the case of a bullish bar, a downward swing in price, and then you get a kind of reversal, and towards the end of it, you get a retracement. So I hope you understand that basic concept. So this down move here, that is the manipulation. This up move here, that is the manipulation. This down move here, that is the manipulation. This down move here, that is the manipulation. Okay. So basically, the manipulation is opposite the direction of the bar. So this is a bullish bar. The manipulation is what? To the downside, because this is a bullish bar, right? So having understood that, um, there is an important concept you also need to know about PDRs. Okay, when price closes, okay, I've explained the concept of open, high, low, and close. Now, when price closes above a PDRA, the algorithm is going to use that PDRA as a bullish PDRA, even if it is a bearish PDRA. Note that down. Okay, so let's say, for example, you have a bullish fair value gap. Okay, let me see if I can find a quick example to explain this. um I can't find a quick. Okay, so this is one here. This is a fair value gap, right? Extend it out in time. This is a bullish fair value gap on the norm. Okay, this is a bullish fair value gap. When you get a close below a bullish fair value gap, the algorithm is going to use that fair value gap as a bearish fair value gap. Okay, you can see as price came back into it, and then you see how price reacted to it. Okay, so basically, what I'm saying in essence is that when you have a PDRA, even if that PDRA is bullish, once price closes below that PDRA, the algorithm is going to treat that PDRA as a bearish PDRA. Okay, and this is applicable to all PDRAs. Okay, from breakers to other blocks to new week opening gaps to volume imbalances and so on and so forth. Okay, so a close above the PDRA, the algorithm will use it as a bullish PDRA, and a close below it, the algorithm will use it as a bearish PDRA. Okay, good. Now, our focus is on new week opening gap. Okay, forget about every other PDRAs and focus on new week opening gap. Okay, now for new week opening gap, I'm going to give you a set of rules. One, a new week opening gap is confirmed bearish if there is a weekly close below that new week opening gap, and a new week opening gap is confirmed bullish if there is a weekly close above that new week opening gap. Okay, so if a new week opening gap forms and then at the end of the week there is a close below that new week opening gap, that new week opening gap will be considered bearish. Okay, and vice versa. All right, that is the first set of rules. Now, Remember what I told you, if price closes above a PDRA, there's going to be a switch in the states of that PDRA, even if it is originally bullish. If there is a close above it, it is going to become bearish. So applying that to new week opening gap, if a new week opening gap was initially confirmed bullish, right? I'm going to show you, don't worry, I'm going to show you on the chart, so you don't need to cram anything. Once you sit on the chart, it's going to become a lot more clearer. Okay, so let me just show you so that you will not be confused. So let me just pick one random new week opening gap. Okay, so we have this new week opening gap right here. Okay, now if you don't know what new week opening gap is, new week opening gap is basically the range in price between the close of the previous bar and the open of the current bar. So for example, on this week, the close of this down close candle and the open of the next candle. Okay, so that is our new week opening gap. I'm going to extend that out in time. So this is the open right there. Okay, so the new week opening gap formed between this down close candle and this bullish candle, right? At the close of this week, there was a close above this new week opening gap, right? So this new week opening gap is going to be confirmed bullish. Okay, and if we get a close below it, it is going to change its state from bullish to bearish. You can see from here we had a close below it, so the state of this new week opening gap, and you can extend it as far back, you can extend it into the future, anytime into the future. In fact, 3 years, 4 years, 5 years from now, this new week opening gap is still going to be valid. Alright, so we can extend it out in time. So let me just extend this out in time. So that's okay. Good. So basically what I'm saying is, at the start of a week, once you see a new week opening gap, the initial state, okay, the initial state of the new week opening gap will be confirmed at the end of that week. Okay, so if there is a close above the new week opening gap at the end of that week, that new week opening gap initial state is going to be bullish. Once you get a close below it like we had here, the state is going to become what? Bearish. If you get a close above it again, the state is going to switch to bullish. If you get a close below it again, the state is going to switch to bearish. If you get a close above it again, the state is going to switch to bullish. Okay, I hope that is clear. Or do I need to repeat myself? I know you understand. Okay, so and you can use any new week opening gap, anyone. Okay, so I use this as an example. I could use this as well. You can see this is a new week opening gap. This has been on my chart for quite a while. Okay, so this is a new week opening gap that formed between the close of this candle and the open of this candle. So this is the close of this candle, this is the open of this candle. So that range in price is a new week opening gap, and at the end of the week we had a close above that new week opening gap. So the initial state of this new week opening gap is what? Bullish. Alright, and when we get a close below the new week opening gap, the state of that new week opening gap is going to switch bearish. Okay, and likewise here we have a close above it, the state of this new week opening gap is going to what? Switch bullish. Likewise here we have a close below it, so the state is going to switch bearish, and that continues into the future. Okay, and like I said, this applies to every new week opening gap, every new week opening gap. So you can also see we have a new week opening gap here between close of this candle and the open of this one is very tiny, but definitely still valid. Okay, let me zoom in. You can see there is a tiny little gap right there. Okay, so it is definitely still valid. So let me just extend that into the future. So that's the first set of rules you need to understand. Okay, the next rule you need to understand, which is the most important. Okay, pay attention. All right, if a new week opening gap is confirmed bullish, or there is a change in state from bearish to bullish, the first return to that new week opening gap must not close below it. Let me repeat myself. If a new week opening gap is confirmed bullish, right, the algorithm will not allow a close below that new week opening gap on the weekly. Okay, either we are talking about the initial confirmation or we are talking about a change in state. All right, so let me repeat myself in case you didn't hear that well. Okay, if a new week opening gap has been confirmed bullish, in other words, if price has closed above it on the weekly, or if the state of that new week opening gap has switched from bearish to bullish based on a close above it, the next return to that new week opening gap on the weekly, the algorithm will not allow a close below that new week opening gap. Why? Because it is bullish. No matter how far down price goes below that new week opening gap, by the end of the week, the algorithm will ensure that price is well above the new week opening gap, doesn't close below it or even inside of it. In fact, the algorithm will not even allow a close inside of that new week opening gap, no matter how large it is. And vice versa for bearish scenario. Okay, so if a new week opening gap has been initially confirmed bearish, or if the state of an existing new week opening gap changes from bullish to bearish on the weekly, the next return into that new week opening gap must not close back above it, ideally. Okay, this is how the algorithm is programmed. Okay, this is how the algorithm is configured. All right, that is the next set of rules you need to understand. Okay, let me repeat myself again just to make sure you get it right. When there is a close above a new week opening gap, that new week opening gap is going to be used as a bullish PDRA. Okay, so that becomes a bullish new week opening gap. If there is a close below it, it becomes a bearish new week opening gap. Okay, the first return into a bearish new week opening gap, the algorithm will not allow a close above that new week opening gap, that bearish new week opening gap. All right, the first return, emphasis on the first return. Okay, there is a 90% or roughly, let's say 87%, and this is real data, right? There is a 87% probability that if price should return to a bullish new week opening gap, now I have already explained what a bullish new week opening gap is. So if price the first return to a bullish new week opening gap, the algorithm will typically not allow a close below that new week opening gap. All right, and if you get a false return into a bearish new week opening gap, the algorithm will not allow a close below it. So let's look into the chart. By using this as an example, so we have a gap between the close of this candle and the open of this candle, right? On this week, the weekly candle closed above it. We got a close above the weekly candle, right? So we know that this becomes a what? A bullish new week opening gap. So we know that if we get a rally below this new week opening gap, we know that by the end of the week, the algorithm will not allow a close below it. So on low time frame or on the daily or whichever time frame you are using to trade, once you see price is below inside the new week opening gap or below it, no matter how far down it comes, typically by the end of the week, the algorithm will push price back up on the first return. So this is the first return into the new week opening gap, right? So while price is dropping below this area, you are going to be what? Looking for longs. So this is the manipulation. You'll be looking for long to ride the expansion. Once you get your long, typically price is going to quickly expand to the upside to close back above it. That is the first return. Okay? I hope that is clear. Now, this is a second return. We close below it. There is a 60% probability that is quite low. That is why I'm emphasizing the first return. Okay? There is a 60% probability that the second return will not close back above it. So this is a second return to it. Remember what I said? There is a 60% probability that the second return to a new week opening gap to is not going to close below it. Okay, so you can see for me it's closed below it, right? Now, the next thing you need to understand is that when there is a switching state of a new week opening gap, either from bullish to bearish or from bearish to bullish, the algorithm will typically push price back to that new week opening gap. Now, this is also applicable to other PD arrays as well, but for the purpose of this video, we are focusing on new week opening gap. So, if there is a close above a new week opening gap, typically there will be a return to it. There is a close below a new week opening gap, there will be a return to it. Okay, there is a 75% probability. Now, this is real data, right? This is real data. I've backtested this. This is real data. Okay, so if there is a close below a new week opening gap, there is a 75% probability that will get a return to it. Okay, and if there is a close above a new week opening gap, there is a 75% probability to get a return. So you can see close above it here, we got a return to it. Close below it here, we got a return to it, even though it didn't go back above it. And we also closed above it here, we got a return to it here. We close below it here, we got a return to it here. We close above it here, we got a return to it here. We close below it here, we got a return to it here. Almost pretty much like the next candle. Okay, so if this weekly candle closes above it, the next candle or the next two candles probably return into it. Okay, and you can also look at this one as well. We had a close above it here, we had a return to it here. A close below it here, a return to it here. A close above it here, a return to it here. A close below it here, a return to it here. A close above it here, you got a return to it here. And so on and so forth. Okay, you can see a close below it here as well, a return to it here. Alright, now let me also emphasize that when I'm talking about a close, Okay, when I'm talking about a switching state of a new week opening gap, for a switching state to be valid, okay, the open, for example, for a switching state from bullish to bearish, for it to be valid, the candle must open above it. Okay, so you can see from here, the opening of this candle is above this new week opening gap, but the close is below it. That is valid. This one now would not be a valid close below it because the opening of this candle is not above this new week opening gap. So it has to open above it and then close below it for it to switch from bullish to bearish. In the same way, for it to switch back from no from here, it has switched bearish here. This is where it switched bullish because it's opened below it. This is the open of this bar, but then close back above it. So that is where we had a switch in state of this new week opening gap. Is that clear? So how does this relate to bias? How do you use it to frame bias? I already mentioned it a while back. I'm going to explain again. Once I have a close below it, first return above or inside the new week opening gap, the algorithm will not allow a close above it. You can see from here, we had a switching state of this new week opening gap right here on this week. Opened above it but closed below it, right? So as the market is rallying up here, you know that your bias is going to be what? Bearish. You'll be looking to go short. Okay, and once you get a setup, you can target the next closest new week opening gap to it, or you just hold it to the end of the week. So if you get a short around here or inside of this new week opening gap, you can just simply hold it to the end of the week. Okay, this is the second return to it. Personally, I don't like to trade the second return except I am trying to frame a high probability new week opening gap. Okay, or if let's say there is a new week opening gap and I know that the first rally above it is what we are seeing. For example, we could use this on this week. You can see this is a new week opening gap. Extend it out in time. At this point, this week we had a change in state of this new week opening gap. You can see, if we go back in time, initially the initial confirmation is bearish, right? This is the first return to it. Price closed above it, so we had a change in state, right? And on this is one of those examples where it's closed above it. Okay, most of the time you find out that it is typically during a high impact news event. So if you go back to check, you realize that this is a high impact news event. Okay, and after switching bearish and after switching from bearish to bullish, the first return to it is this candle. Okay, so while price is below this new week opening gap, below this area, below the high of the new week opening gap, inside that range, you will be looking to what? To go long. Okay, and this is over. That's like 132 pips move. Okay, so let's say you even just waited till the close of the week and you close the trade. That is still 47 pips move, which is reasonably enough. So the first return to it ideally should not close back below it, right? There's a 90% probability or a 7% probability that it will not close back below it. Okay, and this is the first return, second return, third return, fourth return, and then we had a switch in state right here. Okay, now on this week you can see that this weekly candle opened above it and closed below. So the next return above it, so inside of this range, you will be looking to inside of that range as price is rallying up. That is manipulation, right? As price is rallying up, you will be looking to what? To go short. Why? Because at the end of the week, you are confident that there is a 90% probability that the weekly candle will close below it. Okay, so if you get a short or low time frame, you'll be looking for a short setup on low time frame, and I already explained to you the kind of setup that I built into the A, right? So basically wait for liquidity sweep on the 1 hour and wait for market structure shifts above an intermediate time high. All right, so pretty straightforward, pretty simple. And this is the second return. Now, on this second return to this guy, you know that on this week, that is this week, we already have a switching state of this new week opening gap. All right, this is first return, second return, third return, fourth return, fifth return. On the fifth return to it, here we close below this new week opening gap. This one, right? So it has switched from what? From initially bullish here, right? This is where it was confirmed bullish, and then this is where we had a switching state of this new week opening gap from bullish to bearish. So we know that any rally above this new week opening gap, we are going to be looking for shorts. So all of this rally, right? All of this rally above here, our bias is going to be bearish. Okay, our bias is going to be bearish, and once you get your short, you know that it is going to close by below this new week opening gap. So you can just simply hold your shorts till the end of the week. That is your one short, 1K setup. That is over 174 pips move. So all through this rally here, you'll be looking for what? For shorts. Now, prior to price getting here, you could probably look for longs, because you can also see from here that this is a new week opening gap. Extend it out in time. You can see that this is the first return to it. So if you had gone long here, you could target this guy. Remember what I said? Once you have a switching state, there is a 75% probability that price will return back to that new week opening gap the following week. Okay, you can see we had a switching state here. This week we are expecting a returning to this gap. So when you are going long here, you are going to close your short right there, and then all this rally here, you will be looking for short. Even if you get stopped out, just keep checking for your short confirmation, and once you get a short confirmation, hold it to the end of the week. That is your one short, 1Q setup. Okay, look at this new week opening gap here as well. This is the first return to it. You can see how the market rallied. Okay, now we have a switching state. Remember, the next week you will be anticipating a return into it. So you can use the anticipation to frame a long setup to return to that new week opening gap. Okay, we have had a change in state, so you're anticipating that price should return back into it. You have a 75% odds that price will return back into. So you could frame a long, right, at the opening of that week. You can see how price also came back below this new week opening gap and this new week opening gap. Okay, you can also see that that is the first return to this one. Okay, we had a close above here. Since we had this close above here, it was confirmed bullish. This is the first return. So you know that once you opened and you say rally below it, right? Anything below this area, you are going to be looking for long, because you know that at the end of the week, the algorithm is not going to allow a close below this area. So all through this drop down here, your bias is going to be bullish, and it is going to remain bullish. Okay, and once you have a switching state, you can see this is a switching state, and look at this guy here as well. Once you come above this area, you can see from here, above this area, we are going to be looking for shorts, and below this guy, because this is where we had a switching state for this new week opening gap. This is as far back as 2017. That was the new week opening gap I used, 2017. Okay, so you can use any new week opening gap, guys. Okay, you can now there are set of criteria that are built into the A on how it select which one to use, but you can use anyone. Okay, one important criteria that the EA uses is close proximity. Basically, uses the closest new week opening gap, and its look back period is I think 20 years. That's its look back period. Okay, so it can go back as far back as whenever to pick the most appropriate new week opening gap. Another criteria it uses is it looks for new week opening gap that has been rejecting price or acting as a support for price consistently. Okay, so it counts the number of rejections or the number of times it's provided support and compares it with others to determine which one to use. But you don't need to worry yourself about that. You can use anyone that is just close to the current price action. Okay, so you can see this, right? This is where we had a switching state. This is the open above, the close below it. This is the first return to it. The algorithm will not allow a close above it. So if you are going short, this is the second return into it. All right. Now, if it closes inside it, the next weekly candle can act as a first return. I forgot to mention that if it closes inside the new week opening gap, okay, the next weekly candle you can assume that is the first return. So you know that all of this rally here, you are going to be looking for shorts. All right. Same thing applies. This thing repeats week in, week out. You can see this new week opening gap right here. Extend it out in time. This is the close of this candle. That's the opening of that candle. It has closed back below it. So you know that any rally inside or above that new week opening gap, your bias will be bearish. Okay, so that price is rallying up here. You are looking for shorts. And once you get your short set up, you want to hold it at least till the end of the week, because you know that by the end of the week, the algorithm is not going to work. It's not going to allow a close above it. You can see this is the first return into this new week opening gap after this weekly bar confirmed it to be bearish. And you can extend this out in time and you will see the same thing repeating. Okay, so first return, second return, close back above it. This is a new week. So all through this drop down below here, okay, once you get below this area, your bias is going to what? Switch bullish. Okay, I hope that is clear enough. So you can see the first return failed to close back below it. Okay, so while price is below this area, you are going to be looking for longs. And likewise, you can also see here, price has closed below it, right here. So we have a switching state from bullish here to bearish here. So this is the first return. Okay, this opened up here, rallied up here. You can also see that this guy here, we had a switching state here. So we know that any rally above this area, we are going to be looking for shorts. And you can use anyone. You can see that if you had used this one too, same thing applies. Okay, same thing applies. So if you mark out this, you extend it out in time, this price has closed below it here. That is the initial confirmation to be bearish. So any rally inside of that new week opening gap or above it, you are going to be looking for short, and you want to hold the trade at least until the end of the week. Now, if you have an idea of where you think price is reaching for, okay, you can just target that level in price that you think price is going to reach for, or just maybe hold it to the end of the week. All right. Same thing applies. You can see from here, this is the second return to it, failed to close above. It is less probable. Second return is less probable. Okay, the highest probability is the first return. That first return is extremely powerful. Okay, you can also see from here, this is the gap here we had a switch in states because we opened below it but closed back above it, right? So this is the first return back into it. So once you get below the new week opening gap or prices inside of it, your bias is going to be what? Is going to be um, bullish. Okay, I want to hold it to the end of the week. Okay, so if I should, you can see this new week opening gap right here as well. Okay, let me extend it out in time. Okay, so if I extend this out in time, there is a gap right there, and you can see after we had this close below this gap, this is the first rally into it. So while price is rallying up here, you know that you are going to be looking for shorts. Okay, above this area, you are going to be looking for shorts because you know that by the end of the week, the algorithm will not allow a close above it or even inside of the new week opening gap right there. Okay, and you can use anyone. You can see this guy right here as well. Just mark it out. You can extend it as far back as whenever. You can see we had a close below here, so that confirmed this as a bearish new week opening gap. You know that any rally above here is going to be a short. Okay, I'm just going to hold it to the end of the week. Okay, right, and you can see here we had a close above this new week opening gap right here. Okay, so you know that there is a 75% probability first and foremost that it is going to return to it, and if you get a return to it, once price touches the new week opening gap, you want to start looking for longs. Okay, and you will be looking to hold it till at least the end of the week, right? I can show you as many examples as possible, and you can extend it out in time. You can see if you should extend this out in time, you know that on this week you are going to be looking for what? For shorts, because on this week we already had a change in state of this new week opening gap. Price has closed below it, so we know that any rally above this new week opening gap is going to be what? A short. So on this week, once the market opens inside of that new week opening gap, we saw a gap inside it. That rally up, inside of that rally up, you are going to be looking for a short and you want to hold it at least to the end of the week. Okay, now knowing fully well that okay, this is the second return, this is the first return. You can see knowing fully well that this is the first return into this new week opening gap. You can see this one price has already returned to it here, and this is the second return to it. But for this gap, this is the first return to it. So you know that if you had been short here, you will be looking to close your trade here, because you know that at the end of the week, price is definitely going to close above this new week opening gap, and you also know that there is a 60% probability that it will also close above this one, because at this point in time it has switched bearish. This is the first return and this is the second return. I hope my explanation so far is simple enough to understand. Okay, so this is the first thing, and I can show you as many examples as possible. Okay, this I'm not sure you can see the number of examples I've used here, and you've seen the same thing repeating over and over and over and over again. Now let me even go to you can see the same thing happening here. Close below, first return, must not close above it, must reject. On this week, this is a new week opening gap that we selected. Remember I said you can use anyone. You can use anyone, you can go as far back as whenever, just pick anyone that is close to current price action. Okay, once you get a close below it, you can see on this week we got a close below this new week opening gap and also below this one. Alright, so you know that any rally above this area, you are looking for what? A short. Okay, Above this area, above this guy, they are looking for a short. Okay, you can see that this new week opening gap right here, on this week we close below it and below this. So any rally above this or above this, you are going to be looking for a short. So let's say you didn't even mark out this one. Let's say you didn't mark out this, okay, and you are using just this. So you know that once price is rallying above here, you are going to be looking for a short. Okay, there is a 90% probability that the algorithm will not allow a close above it. Easy, simple, Akon and Bingos. You can see here as well, on this week, we closed below this new week opening gap. So we had a switch in states. We opened above it, but we closed below it, right? So the next week, you see we close below this guy as well. We close below this guy. We close below this guy. So you know that the next week the algorithm will not allow a close above this area and above this area. Okay, because this is the first return. This is the first return to this new week opening gap, and this is also the first return to this new week opening gap. So any rally above this area, you know that your bias is going to be what? Bearish. And likewise, on this week, we close below this. I don't know how this one works here. I think it's moved. It's moved. This is the gap. Okay. The close of this bar and the opening of this bar. So price has closed below this guy and also below this guy. This is also a new week up. So even if you didn't use this, let's say you didn't use this, this is the new one that formed. We have already closed below it here. So you anticipate that we're going to get a return into it. So let's assume we didn't even use this at all. Okay? But remember I told you can just use anyone that is close to current price action. Okay, so you open, you can actually take a long with the expectation that we're going to get a return back into this guy or this guy or this guy, whichever one you decide to use, it doesn't really matter. Okay, so and you know that once price is above this area on low time frame, you will be looking for what? Shorts. You will be looking to go shorts. Okay, so now you can see the same thing repeat and repeat and repeat and repeat over and over and over and over again. Okay, so let's go to current price action and let's see if you can see all the new week opening gap I've marked up previously. Let me start from the fact on this week. This is March 25. I can remember that I had a 2-week break from my program back in March, and that was exactly how what I used to pass a funded challenge on this week. Okay, because I saw that price has closed below this new week opening gap, below this new week opening gap, below this new week opening gap, and we are starting a new week. So I knew that I was anticipating a rally to the upside. You can also see that this is a fair value gap, right? Tiny little fair value gap right there. So I knew that this rally will see to the upside. Price is not going the algorithm is not going to allow a close above this area or above this area. So if we go to the daily, let me go to the daily and just show you. This is March 25. That was it. So this is Friday. We had already closed below all these guys. Okay, so on Tuesday, I knew that there was a fair value gap here on the daily. So I knew there was a fair value gap here on the daily. I know that based on the new week opening gap concept, any rally inside of this new week opening gap or above it, I would be looking to go short. Okay, I would be looking to go short. And let me even see if I can show you the exact trade that I took on on and even on this same week. I think I took a long here because after this close on the weekly, after we had a close on the weekly, this is the daily, so it's not very obvious. We had a switch in state on the weekly. This was the first return to it on this week. So I knew that that week there is a good chance that we will not close below it. So once the market dropped inside of it, I was looking for a long setup. I got a long setup and I took profits when price hit this guy here. Okay, let me actually even show you. Let me log into my CTrader account and see if I can show you. Okay, let me reload it. Okay, so this is a challenge I took back in March, right? With my funded FX, you can see the profit target is 8%, and you can see 818% profit. Let me change this to, okay, let me just use past 3 months. So these are all the trades that I took, and it is based exactly on the principle that I explained to you in this video. Okay, let me see if I can go back to that exact trade. This should be the first trade. I think it's supposed to go back to that point in time. Can you give me that? This is 838. Okay, so this is March 26. You can see this is March 26. This was a setup, right? I can't use it. I can't go to March 26 on TradingView because of the limitation. I'm on the free version of TradingView. I'm not paying for it. So this is March 26. Let me look for March 26. This is March 26. Okay, so this was exactly what I used to frame this long, right? This short rather. I took the short here and I took my first profit here, right? And I closed the rest right there. So I close the rest. So this is the price action here. I went short somewhere around. So you can see that this works. Okay, I'm not teaching you something that I haven't used myself. I've used it, and you can see from the CTrader account I showed you that I did not have any losing trade. Okay, this was a 100% win rate, and this was within the space of 2 weeks. Okay, this was when I started the challenge on the 29th, and this is 27, 28, 29. So this is like within 5 days. The price action was really good on that week, so it was very, very straightforward. I'm trying to scroll to that price action again. Okay, so you can see that this is Friday, this is 29th, this is 29th. You can look below here, this is 29th, that is Friday 29th. So the moment price came inside of this new week opening gap, I was looking for longs, and then a long presented itself on the low time frame right here. So I went long and I closed immediately price. You can see that was the high of the day, somewhere around the high of the day. So I closed it somewhere um, around here. Immediately price hits this new week opening gap right there. I close it. Okay, so you know that this works. Okay, so let me go back to the weekly time frame and show you a few more examples from recent price action. That was back in March, April, towards the end of March, early April. Okay, that was the same concept I applied here. So this was the week I started the challenge. So once I saw that price has closed below 122 new week opening gap, I know that the next weekly candle is likely going to be bearish, right? So once I saw a rally on Monday and on Tuesday, I saw that we were right above here. And on the daily, there was a fair value gap around there on the daily. I was confident that by the end of the week, price should be below the 2 new week opening gap because that is the first return into it. Because we already have a switching state of the new week opening gap right here. We opened above it and we closed below it, so that is a switching state from bullish to bearish. So any rally above it, you know that by the end of the week, the algorithm would not allow price to close above anywhere anywhere above the new week opening gap. All right. So that's the first return. This is the second return. This is the third return to it. Okay, now you can see that on this week we had a close above it, right? This is a close above it. So on this week we'll be looking to what? To go long. All right. Now the market closed aggressively below it because of CPI. Okay, this is CPI week. So the exception to this rule is when there is a high impact news event. High impact news event, anything can happen, right? Anything can happen. So it can either it doesn't. No, sometimes it's to respect this rule, but when there's a high impact news event, you don't need to. It's better to just stay out of it, right? Except if you get a trade maybe on Monday or Tuesday, but it might be better to just close it before the release of the news, right? Now, I'm sure that if you go to the low time frame, you would still have gotten a long around here. Let's check it. Let's go to the daily and see. This is 1st of March. This is 8th of April. 8th of April. Let's use 8th of April. So daily. This is CPI week. Yeah, that was on Wednesday. That was CPI for sure. So you can see that this is Friday, this is Monday. You saw a drop into it. So you would still have gotten a long, even if you apply the same principle. So let's say you targeted this high. Okay, this is Monday, that is opening of the week. On Monday, that is 8th of April. Okay. So the market drop into this new week opening gap. This is Friday. You can see Friday close. We close above this guy. So we know that any drop into this area, we will be looking for what? For a long. Okay. So if you have taken a long here and you close it here, that is still a decent one short, one Q setup. That is a decent long. That is how many pips? That is about 55 pips. That's a lot. And then you know that CPI day you get out of the market. You don't participate in CPI or other high impact news event like FOMC or non-farm payroll. Okay, the algorithm is not, it doesn't respect the typical characteristic. What you would typically expect may not happen during high impact news event, especially CPI, non-farm payroll, and FOMC. Okay, so it's better to just stay out of the market during those high impact news events. So you can see that even on this day, let me go back to the weekly. So this is the candle. This is April 8th. So you can see even on this day, on the daily, you see the same thing playing out on the daily. There was a long here, you could have targeted this high and it will still be profitable, right? So now on CPI aggressively closed below this new week opening gap, this new week opening gap, this one, and whatever. So you anticipate that on the next week, okay, you anticipate that price is going to come back to the new week opening. Remember, there is a 75% probability that you will get a return when there is a switch in state. You can see that all of these new week opening gap, there was a switch in state during CPI. And we know that there is a 75% probability that the algorithm is going to return to it the following week or the next or 2 to 3 weeks after. Okay, so this is the next week. The market opened, a new week opening gap formed here. We closed above this new week opening gap. We confirmed it as what? Bullish, right? But remember, during this week, we don't care about this. Okay, we only care about the new week opening gap that has been confirmed, or the one that has just recently had a change in state. So you can see from here, we had a change in state of all the new week opening gap here. Okay, so this is the first return to this new week opening gap. Okay, this is the first return to it. So above here, you are going to be looking for a short rather. So if you went short here, let's say you hold it to the end of the week, okay, and you close it, that is a decent, or you could have just even targeted this new week opening gap here that just formed, or hold it to the following week, because now at the end of that week, you see that price has closed above this one, and we know that there is a 75% probability that the following week will get a return to it. So you can see that this has been confirmed what? Bullish. So we know that any drop below this area, our bias is going to be what? Bullish. So at the start of the week, we know that we'll get a return to it. So you could frame, although it's not very probable. It's always better to wait and see if you will get a return into that new week opening gap or even below it. Okay. So anywhere below this area, you'll be looking for a long on low time frame. Okay, and then the following week we close above this new week opening gap that formed between the close of this candle and the opening of this candle. So we close above it, so that confirmed this new week opening gap as a bullish new week opening gap. So the first return into that gap is supposed to be what? A long. So you anticipate that we may get a return to it. Now it's not every time you get a return to it. Remember, it's just 75% accuracy. The probability is 75%, right? So you know that while price is below this area, you are going to be looking for a what? For a long, and you want to hold it at least until the close of the week. At least until the close of the week, right? Let me delete that. Or you can just target a new week opening gap that price has not yet returned into, like this one right here. So once you get above it, you want to close it. You can see from here that this is the first return. This guy right here, you know, this is where we had a switch in state of this new week opening gap right here. We had a close below here. So this is the first return to this new week opening gap. So above here, we are going to be looking for shorts. Likewise here, this is the first return to this new week opening gap. If you had gone long here, you know that above here, you are going to be looking for what? Shorts. So you could have gone short, take your profits here, anything below this area, you are looking for long, and then this is the first return to this guy, anything above this area, you are looking for shorts. You can see that price has now closed back above this new week opening gap. So we have a change in state from bearish to bullish. So price returning to it here on this week, and then you take your long. How simple is this stuff? I intentionally took my time to repeat over and over and over and over again so that you will be able to understand it. You know, repetition, once you hear it over and over again, it sticks to your memory. Okay, so I've showed you so many examples, and you can use any new week opening gap. You can see You can see this one, if you extend it out in time, the same thing is going to apply. So let's say we didn't even use this guy. Okay? Let's say we didn't use this guy. I don't want to delete it. Let's say this was what we used. You can see I extend it from here to here. Price has closed above here. This is the first return to it. We're going to be looking for long. Okay? Price has now closed below it here. Anything above this area, we're going to be looking for shorts. Okay, so on this week, while price is rallying up, you are going to be looking for shorts. Okay, you can also see this guy. You can also see this guy. No, this is the first return. No, this is the second return to this guy. This is the first return to this one. We close above here. That is one of the one-off. If you check, you will realize that this is probably a high impact news event as well. If you go to low time frame, you will also see that you will most likely have gotten a short. Okay, even though it might, even if you were stopped out. Okay, this is one of those one-off. Okay, and then here, after we had a switch in state here, this is the first return to it. Okay, so you could have gone long here. You can see you had a rally here. How many pips is this? From here to here, that is 97 pips. That is still a lot. And then we close below it here. That is a switch in state. And then we formed a new one here. So you know that any rally above this area, even if you weren't using this one, right? Even if this is just the one you used, any rally above this area, you are looking for shorts. And that would have given you a 90 pip return. So same thing applies. Same thing applies over. You can see from here, you close below it, the first return above it is going to be a short. So same thing repeats over and over and over again. This is not just 2023 alone. This is mostly 2023 price action. I've showed you from recent price action, the same thing repeating itself over and over and over again. You can see right here again. This is a new week opening gap. Close above here. This is the first return into it. Anything below this area, you are going to be looking for a long. This is the first return to here. First return. So anything below here, you are going to be looking for long, right? Let me look. Let's go to 2020. You can see this as well. Okay, we had a close below here. Anything above this area, you are going to be looking for shorts. So on this week, while price is rallying up, you are going to be looking for a short. You want to close at the end of the week, or you just wait the following week to see a return back into it. Okay, you can see this week now we close above it. So any drop below this area, you are going to be looking for a long, and you want to close it at the end of the week. All right. So you can see here now we had a switch in state. Okay. We close below it here. This is the first return into it. So you know that anything above this area, you are going to be looking for a short. How simple, how easy is this stuff? You can also see a new week opening gap right there. Okay, extend it out in time. Okay, you can see we close below it here. This is the first return into it on this week. The following week, remember I told you there's a 75% probability that the following week will see a return to it. So at the opening of this week, you can be anticipating a long into it. So you can be bullish until price get back to that new week opening gap. Okay, but the only thing is not every time that it is going to return to it. Okay, so personally, I like to wait to see price get to it or rally above it. So inside it or above it, that is when I will be bearish and I'll be looking to take a short, and I'm just going to hold it till the end of the week. Okay, so that's the first return to it. All right, and you can see from here we had a close, we had a switch in state. All right, above here. So on this week, anything below this area, you will be looking for a long to return back into it. Okay, so on the daily, once price is dropping below this area, you will be looking to what? To go long to return at least to that new week opening gap. And now that on this week we had another switching state from here bullish to bearish. So you know that the next return into this should be a short. So inside of this area, above that range in price, okay, inside the new week opening gap or above it, you're going to be bearish, right? And you want to hold it to the end of the week at least. This is over how many pips move? This is over 382 pips in 1 week. Crazy stuff. Okay, so these things repeat over and over and over and over again. You can see from here as well. This is a new week opening gap. This is the close of this candle. This is opening of this candle. Extend it out in time. On this week, we closed above it. Okay, we closed above it. So remember what I said? We're going to anticipate a return into it. Okay, so on this week we opened, we came back into it. So you know that while price is inside of that new week opening gap or below it, your bias is going to be bullish. And you can see if you had gone long, that's a, now we don't know how price action is here. We don't know whether it's dropped first and then rallied up here, or it's opened, rallied up first and then came back in. You never know. Okay, but you're going to be looking for a long, right? And you want to close at the end of the week, or you just simply wait to the next week to see a return back into that new week opening gap where you can close your long from here and take a short. Okay, you can see now that we had a close below it, that is a switching state from bullish to bearish, so we know that the next return into it should not close above it. So while price is rallying inside of this area, you are going to be looking to take a short and then you close it at the end of the week, right? Okay, you can also see from here again, this is a new week opening gap. Extend it out in time. We have closed above it here. This is the first return into it. So while price is going below this area, your bias is going to be what? Bullish. Okay, so you're going to take your long and you want to hold it to the closest new week opening gap that price has not yet returned. You can see from here, this is also a new week opening gap. So price has closed below the new week opening gap here, confirming it as a bearish new week opening gap. So this is this week. Price has dropped inside of this one. This is the first return. So you are long here, and then this is the first return to this one. Okay, because this candle confirmed this as bearish. So this is the first return. So if you had gone long here, you want to close your short here, and you go short, close at the end of the week. Alright, so if you had gone long here and you went short here, you can still wait to the end of the and close both of them. This is really crazy stuff, guys. Really crazy. And you can see from here, you had a close above it. Okay, so that is a switching state from what? From bearish to bullish. So you know that the first return into it is going to be a long. So while price is inside of this new week opening gap or below this new week opening gap, you know that you are going to be looking for a long. And you can also see this new week opening gap here as well. So you can use anyone. You can use anyone. So you can see that on this week we closed above it. So that confirms this new week opening gap as a bullish new week opening gap. The next week, remember I said there's a 75% probability we'll see a return to it. So on this week, we came back below here, while price is inside this new week opening gap or below it, inside this new week opening gap or below it, we are looking for a long. And you can use anyone, guys. You can use anyone. Okay, look at this one here as well. Okay, because I've done this over and over and over again, so that's why it's easier for me to easily pick the new week opening guy. You can see this guy here. Okay, we closed above it here. We closed above it here, so we know that this is the first return to it. So while price is below here, all of this drop here, you know that you are going to be looking for a long. Your bias is going to remain bullish. Even if you tried first time you get stopped out, second time you get stopped out, just stay with it. Because by the time you get a long, by the end of the week, you know that price is going to close back above all of them, all of them, all of them, including this guy here. Extend it out in time. Price has closed above here. You can see that price has closed above this guy here. So this is the first return into it. So you know that at the end of the week, the algorithm will not allow a close below it. So you can see there was no close below it. Easy stuff, simple stuff, simple stuff, easy. You can see this guy here is a tiny little new week opening gap right there. Very tiny, but it's there. Let me see if I can zoom in. So let me zoom in. You can see the close of this bar and the opening of this one right there. So you know that once you get out close, any drop below this area is going to be a what? A bullish. It's going to be a bullish bias. So bias is getting bullish. Once you get below this area, the bias is getting what? It's going to be bullish. Okay? Now you see the same thing repeating week in, week out, week in, week out, week in, week out, week in, week out. Alright, so that is the first step. That is the first thing my EA looks at on the weekly time frame. The next thing it does is on the daily. Okay, but this video is already too long. So I'm gonna stop here. But before I stop, let me just show you a few examples of how you can combine the indicator with this concept. So let's go to 5-minute time frame. This is a long that I took yesterday, just recently. I used a 3 minutes time frame though, because I wanted to go in. You can see this is the new week opening gap I was showing you on the weekly time frame for this current week, because the previous week closed above it. You can see this is Friday. This is Friday right there. We closed above this new week opening gap that week. Okay, so you're anticipating a return into it. So on this day, for example, you could have taken this short because you know that you are going to come back to it. There is a 75% probability that you are going to come back to it, even on Monday. So you know that this is Monday. Where's Monday? This is Monday. You know that until you return to it, your bias should be bearish. Alright? So like I said, the bias algorithm has not been added to this indicator. So when you have a sell here, you could have gone short. The stop loss is always going to be above the high of the day. Okay? So even inside, so this buy here, you know you are going to ignore it. Okay, so you know that inside of this rally, you could use, what is it called now? OTE. Okay, you can use OTE here. Just use your fib, draw it from the high to the low, look for equilibrium and premium, and then you try to go short in premium. Okay, but personally, I don't like to take all these kind of shots. I like to actually wait for price to come back into the new week opening gap I'm using as my focus. and then I wait to this is liquidity sweep on the 1 hour swing low, and then market structure shift on 3 minutes in this case, and I go short immediately I see the market structure shift. Okay, and I targeted the closest new week opening gap for a 4 hour setup. Or I could have also held the trade, but I wasn't interested in holding it to the end of the week. So I could have held the trade to the end of the week because I know that by the end of the week we should be above this area. Okay. So that is one example of a setup that was based on that idea. There was one I was showing you. So you can see on this day, this is let me go back to the weekly and show you this guy here. This is Wednesday, March 1. So Monday is going to be 29th. So let's go to the weekly time frame. Let me show you that. So we can see that this is this guy that we're dealing with. This is 29th. Okay, so you can see this is the setup formed right there, 29th. So let's go to the daily. That was it right there, May 1. This is 29, that's Monday. So you know that you're anticipating a return to this new week opening gap. So on Monday, you could be bearish to see price come back here. Okay, but personally, I don't like to do that. I prefer to see price come here and then I take a long and hold it to the end of the week. I prefer this. Okay, so let's go back to the 5 minutes again and see the actual setup on 5 minutes. So this is that return into it. So we came right there. We had a buy setup, so you could just go long. You can see there was no retracement. That's why I said I don't sometimes wait for retracements. Okay, the EA doesn't wait for retracement anyway. So if I go long here, I want to just hold it to the end of the week. This was Wednesday. So Thursday, and that was the close of the week somewhere there. That was a close right there. Okay, this is how many hour? This is a 7.2 hour trade. So this is your one shot, 1Q setup. Okay, and this other week too, you can see the same thing repeat itself. This is Monday. Okay, to return to this area on Monday. Where's Monday? This is okay. So we closed above this new week opening gap. This is this new week opening gap that formed on Monday, right there. On Monday, we closed above it this Friday, closed above it. So you know that any drop below this area is going to be a long. Okay, so here we had a buy. Alright, so you could go long there, or if you had wait for a retracement, this is also a shift in market structure. Liquidity should below this logo. This is not a 1 hour low, right? That's not a the 1 hour is probably around here. That is why the buy setup from here. Okay, but you could also have used this. This is a intermediate term high, liquidity sweep, market structure shift. So you could have gone long here and just simply hold it till the end of the week, which is right here, I guess. Okay, so that's pretty much it. I'm gonna go over the next step, which is the daily. So the weekly is the first step, the daily is the next step. Okay, you can also use just weekly alone. Okay, but for the year I combined both the weekly and the daily to frame the bias. Okay, so I think I'm going to make another video where I will go over the daily bias. Okay, so this is a weekly bias. It is enough, you can use just this, right? But the daily bias is going to take it another step forward. Okay, daily bias does not use a new week opening gap, doesn't use a new day opening gap. The daily bias is based on something else entirely. Okay, so um perhaps next week, I'm going to drop the video. Hopefully, before the end of next week, I'm going to drop the next video on this series. And then another thing I should also mention regarding the new week opening gap is that there are ways to know if how far price is going to rally above the new week opening gap. Okay, I didn't cover that in this video. Maybe in future videos I will cover that. And also, there are different types of new week opening gap. Some new week opening gap are vacuum block. Some new week opening gap are volume imbalances. Some new week opening gap are liquidity void. Okay, and each of them they have different characteristics. Okay, there are ways you can know based on the type of gap. You can know if price is going to completely fill it. You can know if price is going to reject from the consequent encroachments of the gap, or if price is going to reach for something else above or below the gap. Okay, I'll cover that in future videos. I'm actually also working on a series um, that is like a complete course on ICT strategy based on this EA, based on how this EA takes long setup. Is going to cover every single thing, okay, especially for beginners, right? Maybe in that course, I'm going to go over all of the nitty gritty details of this approach, all right? But until then, this is enough, okay? This is more than enough. I hope you find this video insightful and helpful to your trading. Please do like and subscribe and turn on your notification so that you don't miss out on the second part of the video where I will be going over the trade approach, the daily approach rather, to framing high probability trade bias and price narrative. And in case you are not yet on my Telegram channel, I will encourage you to join in. I usually do post my trade setup on the channel. At the moment, it's not been active for a while now because, of course, I haven't been trading. But once I resume back to trading, I'm going to be a lot more active on the channel. My trade ideas and trade setups will be posted for free, of course, on the channel. And I recently reactivated a Twitter account I created long ago, which I never used. Sometimes last year, I think the Twitter account is going to become a lot more active. My plan is simple. I just want to post my trade ideas and my trade setup based on this approach that I taught you, framing the weekly bias, the daily bias, and actual trade setup exactly as the EA trades it. Okay, so when there is a buy signal and I think the market is bullish, I'm going to post it with a screenshot of the setup and where I think price is going to go to on the Twitter account. So the my Twitter username is on the screen, and I'm also going to add a link in the description of this video, as well as a link to my Telegram channel as well. If you have any question, please feel free to ask. I will try my best to answer as many as I can. Thank you for watching again. I'll see you guys in the next video.